What's up, guys? It's the Trading Wizard here. In today's recap, I'll go over two beautiful wins that I took. So, without further ado, let's go right into it, guys. Alright, as you know, we always trade the 9:30 New York opening. Alright, so let's go. What do we see? Alright, guys, so as you can see, 9:30, from 9:30, we always get the most volume in the market, so it's the most profitable for us to trade those times. Alright, so I was looking bullish today. No, actually, my bias was neutral. So I was open for longs and I was open for shorts today. Alright, so at opening, we got a very big bearish move. I was looking for somewhere where we could react off. Now look at this, guys. This is one of the strongest confluences that I have. If we react from here, as you can see, we made a beautiful bullish reaction out of this LFEG. But not only did we do that, we also created an SMT. Now you could be wondering, what is a SMT? SMT stands for Smart Money Tactics. So what is it? It's when on what as you know, guys, we always trade two markets. We trade on the one we put our entries on Nasdaq, and on the right side we have S&P 500 or ES, and we always compare those two to see if they are being correlated or not, and to spot SMTs. So what is a SMT? It's when the one market takes out the low. So as you can see, this low has been taken out, but on ES, this low doesn't get taken out. So what does this mean, guys? It means we have an SMT, a bullish SMT, and that the market will more likely to go up. So we have this LFEG reaction and we have this SMT being made. So it's more and more confluences for me to go up. And this is called the LFEG, the last fair value gap of the leg. As you can see, here is a fair value gap, here is a fair value gap, here is a fair value gap. But the last fair value gap of the leg, if price reacts from here, it's a very, very strong conviction that longs are going to work. Alright, so let's see if we react from this zone. Look at this reaction, guys. We touched into it and then we had big move up. And while we had that move up, we inversed this bearish fair value gap, and with a big displacement candle. When you see a big displacement candle like this, inversing the bearish fair value gap, you have very strong convictions that it will work. You're long. So we enter off the candle close, you put your stop loss right beneath the fair value gap. Now where do we take profits? We can see on the left side for higher time frame fair value gaps that hasn't been touched into. So as you can see on the 50-minute time frame, we have this big bearish fair value gap here that hasn't been touched into. So I mark that out. So my take profit here. And we had a very nice break-even point right here. Break-even point, and this was a 15-minute unmitigated fair value gap. That means a fair value gap that hasn't been touched into. Alright, so at break-even point, we put our stop loss to our entry, so it's going to be a risk-free trade. We can't lose anything, or we just take our profits. Alright guys, so let's see how this trade plays out. So here is where I put my stop loss to my entry for having a risk-free trade. And boom guys, take profit hits. So this overall was a very good trade. We reacted from the LFEG. We displaced with momentum. We had a beautiful break-even point and a nice target to take our profits. But are we done, guys? No, we are not done. I always trade from 9:30 New York opening until the closing of the New York opening, and that is 11 right here. So we just move forward, guys. We don't stop after a win. So price goes and goes. Alright guys, look at this, we are coming. Alright guys, look at this, we are coming down and we created here this bearish fair value gap. Oh sorry, this bullish fair value gap. So I marked this out because I was looking for a continuation downplay. So fair value gap. I was waiting for a candle to close under this fair value gap for my entry. Boom, a nice displacement candle under this fair value gap. So here was my entry, my stop loss right above this bullish fair value gap. And for targets, I just actually trailed my stop loss. Or we could have targeted this swing low, it's also good. and we have a nice break-even point right here. So if we go here, I put my stop loss to my entry, so it's a risk-free trade. And also guys, do we react from somewhere? This is also important. As you can see, we were reacting from this 5-minute bearish fair value gap. So we touched into this bearish fair value gap and then had a reaction to the downside. So this was also extra confluence for me to take this trade. As you can see, we touched into the fair value gap and made a bearish reaction. So let's see how the trade plays out, guys. Alright, so break-even point, so I put my stop loss to my entry, so it's a risk-free trade. And yeah, let's see. So now, just to lock in some profits, I put my stop loss right here at this point, if price moves up, my position got closed and I walked away with profits. So as you can see, guys, right here, I took my profits. And yeah, guys, overall, this was a very, 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 very beautiful session. Two beautiful wins, following my rules, staying patient, and this is what gets you profitable, guys. If you want to learn more, give me a follow, subscribe, give me a like, comment something in the reactions. I will do my best to explain it as good as possible. Yeah, guys. See you on the next time. Bye bye.